Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. Last few days I researched a lot, looked in a lot of stocks, a lot of businesses, and I found some interesting stocks and I will analyze all of them in the next few days. Overall, I found 5 undervalued businesses. And as you maybe know, if you follow me for a while, I'll look for stable, profitable businesses, good businesses to hold for the long term. Here you see an insight to my real money portfolio. And if you're new to my channel, you should know that you get an update every weekend on my real money portfolio with all the transactions I did. And with this portfolio, I made a performance of 55.85% since the start of the 2nd of December of 2019, which is an outperformance to the S&P 500 of over 32%. Like the whole idea, then just subscribe to my channel and follow me on my road to financial freedom. And the company I want to analyze today for you is stamps.com. For our research today into that, I really don't know about stamps.com, but what I saw I really liked. And in this video, I want to give you my opinion on this company and why I think it could be a great moment to buy into this company. Stamps.com, or the shortening STMP, have a market capitalization of $3.2 billion with a PE ratio of 18, is traded right now at $176.51. Stamps.com provides internet-based mailing and shipping solutions in the United States and Europe. It operates through Stamps.com and major pack segments. The company offers mailing and shipping solutions to mail and ship various mail pieces and packages through the United States Postal Service under the Stamp.com, Indicia, Ship Engine, ShipStation, ShipWorks, and Shipping Easing brands. It serves individuals, small businesses, some offices, medium-sized businesses, large enterprises, e-commerce merchants, large retailers, and warehouse shippers. Stamps.com have a big portfolio and they acquired a lot of other companies since 1999. And here you just have an overlook of the whole portfolio and the solutions. And this is really, really interesting, even more because they are a lot into the e-commerce, in the high growing e-commerce. Let's take a look at the financial numbers. When we look at the revenue in the last 15 years, then we see it just goes up, it grow and grow and grow. Over the last 5 years, the revenue grew from 0.214 billion to now 0.758 billion, which is an annual growth rate of 28%. Very nice. And all of that in an overall growing market. So there is a lot of room to grow. And also their earnings per shares of the last 5 years was a little bit up and down, rose at all to lately $9.37. Stamps overall work at good margins. Right now the net margin is at 23%. It's not that stable. This is maybe a minus, but it's almost always over 10% and between 10 and 20%. That's okay. That's nice. And also when we look at the free cash flow, we see that over the last 5 years, they have a very solid growing free cash flow overall. This is also very nice. And then also a view on the balance sheet, and this is really impressive. They built the shareholder equity over time and all of that lately without any long-term debt. They have zero long-term debt, a very, very healthy company, a very healthy balance sheet, and gives a lot of room for actions, maybe for more acquiries, maybe for buybacks. I'll talk about this a little bit later. A lot of room to do good business. I found here a very, very good company, very high quality company in a growing market. But of course, as always, the next question is, what is the value? What is the intrinsic value of this company? Therefore, we also have to look at the price, at the stock price. And when we look at the stock price, then we see that in the last 5 years, stamps have a performance to the up peak of 166%. But then lately the stock price declined, and lately since mid-February to now it declined 36%. And this makes me wonder why this happened, because as I told you before, with all these numbers we have, it looked like a really good business. And also their lately published numbers was very good. They came out on February 17th with quarterly earnings of $4.13 per share, beating the SEX consensus estimate of $2.63 per share. And this quarterly report presents an earnings surprise of 57%. So the numbers, even the late numbers, are really great. But then it seems like the stock slides as macro uncertainties outweigh Q4 beats. So the stock just falls 36% lately. For me, I can't see so far a real reason for this big drop. I think the market really overreact here. I think they have a good business model. They've shown it over the last 5 years that they have a very stable business model. So maybe this is a good chance. And also the company by himself, I think thinks it's a good chance to buy back shares, because on March 2nd the company announced that it was doubling its share repurchase program to 120 million, which represents 3.6% of the company's 3.3 billion market capitalization. Management of stamps.com also see here a big opportunity to buy back shares to a very reasonable price. Let's do the intrinsic value calculation and find out if we have maybe really a big chance here. And so when I take the current earnings and the estimated growth rate of around 12% and my expected return of 12%, I come to an intrinsic value of around $240, which is way under the current price of $176. It seems like Stamps is around 30% undervalued, and this is a reason for me to buy tomorrow. It will be not a big part of my portfolio. It will be maybe around 1.5 to 2% of my portfolio, so quite a small position. But I will buy into this company because for me it seems like this could be really a good chance to buy into this 36% drop. And then I like to have skin in the game if I have found a company which seems undervalued and very healthy, very stable, without any debt. So this is a reason I will buy into that tomorrow. But as I said at the start, I found 5 undervalued companies, and so tomorrow I will bring you another analysis of another of these businesses. And if you want to see this too and you don't want to miss it, please subscribe to the channel and ring the notification bell so that you will know when my new video is up. And so also in the future you will get all the analyses of very good, stable, profitable, undervalued businesses. This is my goal. This is what I want to do, and it's hard because in an overall overvalued market it's really difficult to find fair or even undervalued businesses. So this needs a lot of research, and if you like this way and if you like the whole idea, just subscribe to the channel and follow me on my road as a long-term value investor. And with that, thank you for watching, and see you the next time with another analysis of another stock. See you then. Take care. Bye bye.